Hey, what's going on YouTube? This is Calvin, back for another episode of Calvin Lim Investing. Welcome to my channel. Before we get started, if you could just scroll down, smash the like button, and subscribe, you would be doing me a really big favor, and I definitely appreciate all the support I can get. So today we're going to be talking about Netflix. We're going to go over about Netflix earnings. They reported earnings today after the bell, and I'm just going to take you through what are the positives and why Netflix is skyrocketing right after earnings. So before we get started, I just want to note I am not a financial expert or an advisor, so please consult a financial advisor or your brokerage before investing. With that being said, let's take a look at Netflix. So Netflix ended the day a little bit above $500. You can see in after hours right after earnings, it shot up and moonshotted from 500 to about 562, 63 for a total gain of over 12% after hours. So I'm pretty excited to see what Netflix does tomorrow morning. But the stock did have a really nice jump, and we've seen Netflix around this price level a couple of times before, but this is the first time in a couple of earnings that there was really positive news. So let me take you through some of the things that happened today. So a couple of key things. Netflix's revenue for the fourth quarter of 2020 came in just 0.01 billion better than expected. It's a really small amount. It's a really small beat for a big company, but the earnings per share was where it made a little bit of difference. And in the aftermath of earnings, you see the stock fluctuate in the 520s. It's because the earnings per share was about 17 cents lower than expected. So how they calculate the earnings per share is you take the earnings divided by the total float or number of outstanding shares on the market, and you get the earnings per shares. And then the big news for Netflix, the shocker, was that they added over 8.5 million subscribers versus 6 million, a little bit over 6 million was expected. They had over almost about 40+% growth or beat in terms of their subscriber base, and they also noted that they do see 2021 being a really good year, and the company is hoping to generate positive cash flow as well as rolling out a stock buyback program. Netflix plans to release about 70 to 80 of their own Netflix original films in the upcoming year. And as a couple of my favorite podcasters like to say, content is king. And this is in the streaming wars, it's about who has the most original content. As you can see, Disney Plus and Disney have been rolling out a lot of their original content. HBO has recently added Wonder Woman. They're going to be looking to add some more movies and offer that bridge between the theater and streaming. And with Netflix developing themselves into both a streaming service and a film studio, I think there's definitely a lot more room to grow, granted that they can maintain or strive towards positive cash flow. So with that being said, thank you for tuning in today and listening to this little recap about Netflix earnings, why it jumped, and some of the positive takeaways.